Yo, I don't know who's in here or not, so we'll just kind of get it going here in a second. Let everybody roll in. I haven't done a live stream in a while. I guess I got to turn my audio off there. There we go. And the chat participant. Jamie's in on the Zoom. I honestly don't know where everything is. I got a gang of people on Twitter. And Global's chief political correspondent David Aiken is at the G20 in Rio, Brazil, where it's not certain what kind of YouTube, I should say. I don't think I got anybody on Twitter. It's crazy how like hard it is to get anybody to see anything on Twitter these days. Like LFG, let's go. All right. Give me a heads up if we got people here. Who's here? Where you're here from, if you want. And I am going to. So this is going to be recorded, of course. So if you're watching this after, okay. So Monday morning, November 18th, 2024. And we are, well, this is the S&P 500 looking on my screen, if you guys can see. We are looking at, first of all, let me just organize all of this for everybody to see exactly why we're looking at this, why, matter of fact, I'll even put these awesome little arrows here so everybody can kind of follow along with what I'm talking about. So the importance of this is this is the S&P 500 weekly chart. On the low line down in here, this oscillator down in here, don't even really need it, but that's the commitment of traders, okay, on the S&P 500. It was useful at that was useful back in April of 2023. Okay, you can see that it went way down here and the market was going down and it kind of ripped ever since. But that's not really what we're going to be paying attention to because it's not useful at the moment. So it's not anything that I'm going to really focus on. You can see that if we just look at the commitment of trader, it's still pretty low, relatively speaking, while we're at all-time highs. And that's context. But I'm not sure how much context it really is, or, am I going to, spend too much time focusing on that? But we are going to start, we're looking at the bottom thing here. And let me just bring that part up. I can maximize it somehow. I cannot. Oh, it's because it's its own panel. So this is the NYSE Advancing Issues. The symbol is ADV on TradingView, in TradingView. You can get it in, I don't know, other places, probably. I don't know what the symbol is on Thinkorswim or on Bloomberg or IB. But for me, as a charter, I find it useful to use TradingView. Now, also, I don't really claim to be a chartist or a charter. More accurately, what I would say, like 95% of my trading is algorithmic. And that's up from, I've been a very systematic trader for a long time, but it's moved to algorithmic over this past, let's say last year is when the move really happened. I think it was about a year ago when the move really happened, maybe a year and a half ago. And I've been trading for 25 years. I can code. I learned how to code or taught myself how to code like 25 years ago. So it wasn't for a lack of the ability to code. It's just being able to code doesn't mean that you're going to be a great trader with it, a great algorithmic trader, anything like that. You need to have the ability to trade the market, and then you can bring the code in on top of it. I feel like, it was overdue by a decade or two that I really went heavy on the algorithmic trading. But here we are. So we are going to kind of go through and look at the overall picture, my macro framework, which is something that is going to sit alongside the algorithmic stuff. Okay. We're going to look at probably about an hour, I think. We're going to do, a top-down look at the markets. We're going to take a look at equities. We're going to look at currencies. We're going to look at futures markets. And then we're going to get into crypto. I could just do the whole thing about crypto. Maybe I'll do that tomorrow, or about certain equities, or, gold, or whatever. And I'm certainly up to, getting, requests for those. But yeah, for now, this is where we're going to go. And here we go. Sorry, I was just checking on. There it is. Okay, so first things first. S&P 500 since global financial crisis here. It's just gone straight up. 90% of all trading days are basically in a blended bull regime, which means high volatility, medium volatility, or low volatility bullishness, or neutral. And like we could go back into just decades and see that it goes up. Yeah, there's a whole period from 2000 to 2000 and was it 13 where it didn't go up. Probably that's when I first started trading, by the way. And this is important information to know, because you can kind of see where people are in their mental flexibility. First of all, if you're somebody who's been around since 2000 and you're still trading, you're doing something interesting. Like you stayed in the game. You're worth it. It's worth listening to them, I guess. I put myself in that category, but it's just a war of attrition. And so if you're still in for that many years, good on you. If you're in since the global financial crisis, good on you. The reason I bring that up is because typically these points are the places where, most people end up in the, joining the market, right? It's pretty much like that. That's, I mean, and yeah, we gotta look into this period here, maybe. Going into 2018 was a pretty remember Apocalypse and all that, but you can kind of tell where people are and what their biases are going to be, and what to expect in a market when you can kind of see where they started. And because not many people started right here, at the very bottom of the global financial crisis. I do know a few people who did, but most people started at the beginning of the global financial crisis, because when the markets are at peak, that's when everybody's in. It's easy to get a job. It's easy to get funding. Everybody has money. The market's just booming. So of course it's going to be, the best time that people are going to be trading. And so you can kind of tell where their biases are going to be. First of all, we all know people, there's some big names on Twitter that started trading right over here. If we looked at all the people that started and got into the markets back in, October, in 2007, let's say, they're always going to have this DNA, the global financial crisis DNA, all over their perspectives, right? Again, those who are still here are arguably, they've worked through it. and when I say they're still here, like they're actually putting money to work. I don't mean just writing newsletters. I mean actually putting on risk of their own, or maybe their own, maybe clients' money. But they would have to have figured something out to still be in the game. And I know metric tons of people who left the industry in here. There's some people that got into the industry in here, and they have a different perspective because they were always told about the global financial crisis and the chaos that ever happened, but a lot of them didn't actually experience it. So they have a different kind of life where the only thing they've experienced is just mostly straight up. Anytime something bad happened, it happened in so 2018 apocalypse. At the beginning of 2018, at the end of 2018, we had the Q4 meltdown. We had the 2020 situation that I can't say because this is on YouTube. Can't say the name of it. But it's so weird. I can't do things on the internet that are reality. Still, luckily there's Twitter. So that, we all know a lot of people who got in over here, right? So if they're still in, that means that they have survived from the peak of what's the term? Peak of the bull market peak, the 2020 free money peak, and about a year of a bear market, and then they took off. So we've got all the context of that here, whether we're looking at this is the 1970s or the 1930s, whatever analog we want to kind of look at, you can always, just whatever. I'm not going to analog this one. What I am going to do is I'm going to say, okay, these are things that we need to keep our eye on when markets are weak and if they are too hot or not. It's just kind of like understand where we are. We're going to start with the S&P 500 because this is probably one of the best barometers of things that I focus on. I don't trade bonds, but bonds trade me. Obviously. I trade S&P, NASDAQ. I trade equities. I trade futures of different commodities, and I trade crypto. And all of those are basically the same market, just with different volatility, I would say. And so if we're looking at the S&P 500, that's kind of the middle of the road of all of them. Bitcoin's going to return 60, 70% this year, maybe more now that we're kicking off. The S&P 500 will do, and or NASDAQ will do half of that. But it's the same thing. Like I said, it's just the leverage or the volatility of the asset. So, you're also going to have a bigger drawdown on a Bitcoin than you will on these as well. So the thing that's been the most useful for me was figuring out this NYSE advancing issues. That's the ADV symbol. Like I said, ADV is the symbol that you can get this. It looks like this, actually. That's what it looks like, whether you used a candle or, lines. It's just not easy. Okay. And so I just hide it, but I still have a 10-week simple moving average chart overlaid on it. Okay. So we're actually looking at the 10-week simple moving average, not the actual NYSE, New York Stock Exchange, advancing declining issues. Okay. And what this tells me is like where we are at intermediate bottom and where things are kind of chill quiet and where things are actually a little more risky. Right now, we are chill quiet, smack dab in the middle of, if we go back and look at every instance of a reading in this level, you can see that no market top was really happening. No market bottom's really happening. It's just kind of, all right, we're just kind of like trading shares. I'm long and then I'm short. I'm short, then I'm long, whatever it is. I'm adding or I'm subtracting. But when we get down into this level down in here, this shaded area, the shaded area tends to be the place where everybody's kind of freaking out. So let's take a look at like December. Let's do, what did I have? 16 right here. So let's see what this one looks like right here. Okay. So you can see that when we get down into this bottom range, this is generally where a bottom has occurred. Okay. Now, the fact that it gets up to the top isn't as useful of information because this goes up all the time. But what you want to see is places where this is going to go. It's going to be bottoming after. So we were at 2,200. We dropped down to about 2,880 on the S&P 500, and we got into that range again. This was in October of 2016. And once we got into that range and pretty darn near the bottom of it, it took off. It just, S&P took off all the way into January of 2018. This would have been the election right here of President Trump back in November 2016. And you recall, so let me try to line it up. You can recall, for those of us who were, in the markets at this time, or I mean, everybody pretty much, I think, remembers, the market just went straight from 2,000 to almost 3,000, peaked up there in January of 2018. We had this thing called Volpocalypse, rallies, tries it again. Then we melt into 2018, and the Dow has its biggest point drop ever in history at that point in time. Now it's normal because 1,000 points is its percentage basis, but at the time that was everybody's headline. And again, we got down into here, December 2018. We get to levels that whenever we break through the bottom of it and go down in here, it is a send it, let's go sort of thing. That's when you want to, do the real work. Again, this happened in April of 2020. And then most importantly, it happened in October of 2022. October of 2022, September, October 2022, it was bleak. It was sad, but this is when we called the bottom here in Pollinate and said, hey, this is it. I think this is where I want to buy. I piled in everything I could, family money, the whole thing. Everybody I could talk to, I was telling them, that's it. We're done. It's going to go higher from here. I don't point it out to everybody. But it was that moment. And, all I got was a whole bunch of bearishness from everybody. So everybody was just repeating the same bearish lines that, there's no way that it could be, because China or real estate or, whatever. I'm trying to get a chart up. MNQZ. There we go. I'll go trade this guy. So it's time to turn day trading algo on for a NASDAQ trade. So whenever we get down into this range, it has always been an excellent place to buy. It's almost as if whenever I go on the face interview, it's a 3-month window, and every 3 months we are right at a period where the market is doing some sort of topping behavior, or selling off, and I go on and I'm like, well, I'm still bullish the S&P, and they're like, oh my gosh. And they've kept a record of every time I go on, and it just so happens to be right at about a point where the market's about to, I think it was here in August 2024. There we go. Yeah, it was right in here the last time. The last time I went on, so that would have been no, that was August, September, October. No, it was in September. No, July, August, September. Whatever. I'm going in January again, I think. October was the last one. But basically, we went into the summer crash, and I was like, I don't think so. We could get some weakness here, but it's a buying opportunity, and that's what happened. We get into that buying opportunity. It happened again, October 2023, and then of course in April of 2023. So we since the bottom in October of 2022, April 2023, again October 2023. April here was a little bit too. August, July of 2024. Great buying opportunities. And you can see each time that was the low of that period. And we haven't seen anything lower in each one of those instances. So it's a super useful thing. Okay. Reach out if you want that template. Happy to share. This is where we are. There's no, like if we're weak, yeah, last week was a week follow through, I guess, or yes. Yeah, I guess last week was a week follow through. I don't know what that 11. Huh. Okay. I thought it was a bit of a rally, but I don't know how many weeks it's been since the election. So actually, it's been 2 weeks, hasn't it? Jeez. Sorry. I forget where I am. So we had a big, strong up move. Looks like about a 50% pullback. And that pullback didn't go into, nobody was selling. It was, it was repositioning, probably a lot of profit taking more than anything. There was a lot of there was a lot of weakness as we were heading into the election. There's a lot of weakness. And when I say weakness, what I mean is people were scared to hold. So there's a lot of like people on the sidelines, they lightened up their risk. And then the news the results come out and it just, sends it higher. And a lot of people had to chase. And of course, when you chase, you buy it at the wrong time and it goes down, whatever, it happens. So far as I can tell, this is just the trend. So you can do, a couple of things. One thing I like to do on these is let's do EMA. See if I can, I'm going to add two, I think it's the 10 and 21 that I like. I think so. And then color this one white. So what I like to see is if I'm going to go ahead and trade this one on a swing basis, I like to get, buying opportunities down at the 21 or the cross up. So it's been a long time for, a buy, but since, for a year now, S&P, once it crossed up on that 1021 weekly EMA, it has not been a sell. A close below it would be a sell, or I should say either a close below or a crossover would be a sell. But you can just kind of sit on that and, enjoy your life. Okay, let's move on. That was a long one. Let's, what's good for S&P is good for NASDAQ. Let's do dailies here. So NASDAQ's been weaker than, let's do percent change, percent for the beginning of the year. Let's 8. Okay, there we go. Okay, 21% on NASDAQ, whereas S&P, these are the futures. And again, let's go to percentage, 23%. So what's interesting is S&P is outperforming NASDAQ. And you don't get that usually unless there's a bit of a transition going on in markets. Because NASDAQ has the components, the leadership happens, just like in crypto, just like in anywhere. The strong names with the best earnings and the best profit and everything like that lead the market. And then after, it's led the market and everybody's gotten bored, they're like, oh, now I want to risk trading on crap. I'm going to go out and risk on, not, I shouldn't say crap, but on the not top 5, top 10, mag 7, whatever they're called, stocks. And so you start seeing, people chasing AMD. You start seeing, no offense to AMD, but the real one is NVIDIA, right? Anytime there's an opportunity for NVIDIA to kind of cool off, AMD is worth chasing. But otherwise, it's kind of the leader's the leader. And so everybody's going to go down and leave where the money has been made. So Apple, people are like, I'm not so much on Apple anymore. Let's get on, another company that earns billions of dollars every quarter and keeps a 25% profit margin on all that money. Go find those. So that means there's going to be, in any sort of weakness, there's going to be a rollback into the bigger names. So let's take a look at dollar right now. So the dollar going into October, into Q4, big, first of all, we can see this very obvious range, right? There is this, so again, we can also see where the, whoops, there we go. So we have a very obvious range on the dollar since the 2022 bottom that, remember, the one I just mentioned that we're so lucky to have caught. And so this is a daily chart of the dollar, Dixie, right? So it goes from, the 2021 period post world crashing to the market peak, which actually wasn't the market peak in equities, but this is, if we went back to that other chart, this is where this was the highest over here, May 2021, June. Let's take a look at the dollar. When was there it was. You can see how it's kind of an inverse effect when it's that weak. Okay, and then we just went all the way up here, did a 50% retracement. Believe it or not, some of the biggest people on Wall Street claim to be technical analysts. We're talking about the GOAT. What's his name? Gosh, why did I forget his name? Anyway, the guy who worked with Soros. Gosh, I should really have this name on the front of my tip of my tongue. Anyway, he claimed, he's a chartist. You got Paul Tudor Jones. You got a lot of the big names of individual folks who like run big family offices and everything like that, who are chartists. So what does that mean? They're going to actually make moves at periods when it's like really interesting to make a move. And well, you can see 50% from the 2021 low in the dollar to the October 2022, the bottom of the bear market. We're right in the middle of it. I don't know if that is all that enlightening, but where we move from there, we've been in this sideways range the entire time. And so if something changes, we're at a place where it should happen. Like the dollar should, if it takes off, that's telling us something. If it comes back inside the range and goes to the bottom or the middle, or just even hangs out at the top of the range or anything like that, then there's really nothing new happening. And we probably won't see, I'm guessing we won't see anything till January, when there's a new sitting president. I would probably look at twos. TN, is that 2-year? What is the 2-year? I forget the. Is it ZT? There it is, yeah. So bonds have just gone straight down, and you can see it's pretty much since the same period on the dollar, the inverse of the dollar, straight down. Take a look at currencies. We got euro, so dollar straight up, euro straight down. Probably, if the best case, or the best idea is to mean revert trade currencies. So what we would be looking for is a strength in weakness in the dollar, strength in euro and others. And, peso has been, this is the peso at the front, not USD MXN, it's MXN USD for the pair. What we're seeing is the dollar strength, but it's a different, it's really been in this same range for 10 years outside of the craziness. So even probably more firepower would be a long peso versus the dollar. And of course, let's do, yen versus the dollar, and the yen cannot get a bid. Even here at this low range, this is where all the crashing that everybody has been, all the bears on the internet have been so focused on, has been the crashing area of the yen. So we want to keep an eye on this one. We want to pay attention to what's going on in the yen, because the yen is going to, it's probably the most riskiest issue, whether it is or not, but that people are, that big traders and big money is focused on is the yen and what they do in Japan. So it's worth keeping an eye on our macro view here, I think. Okay, so let me pop over to, let's bring it down back into, let's take a look at individual equities. We've got Tesla, which is my main risk asset at the moment. Got long in around, so 265, 268, added again over here at like 270, and then it pretty much almost went up 100 points before come back down. And then again, we're back up. So I'm still in this one. I got 340 calls, so I'm like right at the money. It was as high as 349 today, 350 today, 349.50. It's come off a bit since. Apple, I am in, and just, bored to death. Not much happening with it, but there it is. Coinbase and MicroStrategy have become two very large holdings, as well as the IBIT ETF. Same area of the so actually I've owned I think I own it. Whoops. I think where did I originally bought this thing back in, right after the IPO, I think at like 300 or 250 or 230. I remember 230 being a number. I think it was 230 that I got it, and went through all that, and then came back in the summer or the September 2022, added to Coinbase, and I might have picked it up again on the IPO area over here. MicroStrategy is a new one that I think it was, I forgot the date, but it must have been over here, January, February timeframe. So these are now some of the largest, as you can see, that would have been like $80, $70 to $374 right now. So it has become one of my largest holdings. So this is like my main risk portfolio at the moment, and definitely my son's $1 billion. He's up 164% in 1 year already. So I'm going to be more crypto focused on the equities. I'm happy to look at any equities if anybody has a request for me to take a look at. I don't really have a name that I'm going to do. I'm still sitting in Tesla up big and looking for, actually, let's see, that is so the all-time high was, looks like 414.36. Of course, 420 is the most memeable price. I have January confirmation, or I'm sorry, November expiration confirmation. What am I thinking? I have November expiration, so we're getting really close. I'm at the money, and we're getting close to expiration. So I'm really wanting this thing to kick off and send to Valhalla. So my wife gets her favorite Louis bag. I also wanted to take a look at which what's been cooking the most since the election. And that has been crypto overwhelmingly. Tesla's done really well as well, but it's Coinbase, it's the alts, it's Tesla, it's Bitcoin, GameStop, of course, financials, ripped. When we look at sectors that have done the best, financials, discretionary, even ags, consumer or communications. Let's see, industrials. I have two on the IWO. Utilities and tech, surprisingly, not doing all that well. I would imagine this week is when tech really starts to kick off a little bit more. If we want to break it down into the crypto space, where is the best? Where has the most move happened in the crypto space? I think everybody knows the big leader has been meme coins, and AI, and layer ones. So layer ones make sense because that's like the main people of the crypto space, right? Layer ones. So Solana, Bitcoin, Ethereum, Sui, but just the main big cap names of the space. But it's a barbell where the meme coins have been the all year long, ever since I guess Bonk came out last winter. I would say ever since that one got brought onto exchanges, it has been with as well. It has been a meme coin market almost exclusively in the crypto space, and I've done a lot of talk about why that is, and I'll go into it real quick. But the point behind it is, why would it be meme coins that everyone goes into, is because for the last 10 years, it's just been lied. Meme coins that are LARPing as real projects. They're just, they end up being devs that rug people. And, there's so many examples of that. And they're just, eventually, first of all, the new money is always going to the new thing in the space. So if you've been in for a couple of cycles and you've got a lot of capital in the space, you're going to go for the older stuff because you know it and you don't think about it. But new people come in and they're just like, whoa, I want in. And oh my gosh, I can't buy Bitcoin. That's 90,000. I could never, get rich on a 90,000 Bitcoin. Let's look at Ethereum. That's 3,500, 3,300, whatever it is. Oh, I couldn't do that. Let's look at Solana. Maybe. What else? I don't know. Oh, this meme's funny. Oh, ha ha ha. I can put in $100 and turn it into 1,000. That's how I'm going to make all my money. And, that's just what it does. That's what it is. It was the same thing in 2017 when ICOs came out. Same thing in 2021, DeFi summer, NFTs. It's always the same thing. It's the new stuff that is unexplored, and you have as a new participant, you don't have a lot of capital, and you don't really have all that, much, I don't know, knowledge. Like you're not worried of like you're not scared because nobody knows. So you're not going to look like an idiot by coming in and trying to figure out sharding and other layer ones, layer twos, and ZK rollups and all of these things that everybody who nerded out on the previous cycle don't know. So that's the reason those are really doing the thing. And this is my current layout. I'm in Doge, AIOZ, Solana, Sui, Bitcoin, and Bonk. I took some Doge profits and rolled it into AIOZ today. I've been in and out of AIOZ. It's just been kind of quiet. My largest position right now is SUI. It was Doge, and yeah. Doge is now back to a standard size, and then Bonk will be my my other, I believe, largest position. Let me double check. And this is using the crypto momentum system, that the reason that this is in these trades, because memes, AI, and layer ones are the so SUI is my biggest position here. That's been a double. Bonk, second biggest position, that's been a double. Solana, actually, I got into Solana back in 120, so I'm mostly just that's a double. Mostly just kind of like easing out of Solana. Doge was more than almost a triple. Or, no, yeah, it was a triple actually, and then, but looks like it's probably coming back. So this is my current layout. And then AIOZ, which is just getting going. It looks like the signal just fired here. Back at 71, we're about 13 cents up on it. I picked it up on the breakout here. I had it over here, and then I kind of like rolled around into SUI. And so right now, biggest position is SUI. Probably when we get out of here, it'll take off again. I'm thinking we're going to have some more fun. That's what I got. Now, finally, now that everybody's left, I want to talk about positioning. So positioning of the systems that I'm in, of all my strategies, has historically been, for me, one of the best ways to participate. So even though I'm bullish right here, as we were going into this to the July, August, that dip, we were from this period, April to June. Okay. We got up to 100% of full exposure, long equities. And then we got down to about 10% within a week or two. So as we're coming into this August crash, we had about 10% long exposure. It was nothing. The crash happens, boom, instantly starts increasing exposure. And as we were heading into, so at this point here, as we were heading into the election, our position was at about 40% exposure. We're, I believe, at about 80% right now. So within the next day, boom, we just jumped right in long, and 70, 80%. So we still have room. There's still places to add. And that's what I'm thinking as we move into November, into December. Likely we'll just keep that drift up. We'll see how the positioning handles the holiday period, but that's pretty much my expectation on everything. So as far as that goes, all good to go. On the crypto side, it's just memes, layer ones, and real world assets with AI having a signal, shadow signal. So what does that mean? Let's take a look. Where is here? So 3 out of 8 sectors I watch in the crypto space is long. So positioning is not super aggressive there. And okay, let's bring one over. Thought I had there we go. There's Bitcoin. Okay. For Bitcoin, we've caught it. We got our entry signal back in October 2023. I'll try to fit that on the full chart so you can see. There we go. Entry signal October 2023. I believe we'll never see that price again. We bought the lows after the ETF. I believe we'll never see that price again. And then this summer on the crash at August 4th, 5th, whatever it was, again, we bought more Bitcoin, and we will never see this price ever again. That's my opinion. We'll take a look at our analog. which I've been using to, let's update it. I've been using this to kind of identify where we are trading relative to the 2016 to 2018 bull market. I think this 2024, 2026 bull market is almost identical. And it really has been. The white line and the yellow line have just been moving hand in hand. This is a perfect spot to start seeing some weakness come in and kind of clean up the weak hands or the over leveraged. I don't have the heat map of leverage chart on, but pretty much we're even if we look at the one from the 2021 2022 timeframe, we're going into a period where it's likely going to be a little bit weaker, okay, for Bitcoin. So what that means, typically for us who trade crypto, that means the altcoins, the other sectors usually catch a bid, okay? If Bitcoin gets too weak, then everything stops. But if Bitcoin keeps its strength, we should be able to catch a bid. Okay, so let me get this. Let me add plus BTC USDT.P on the Binance. And then let's divide by 2. Okay, so that should give us more of a blended image of how volume is for let's do like 33. Okay, and then let's make it a little row size. Let's do like 200. Let's see how that looks. Okay, that looks a little bit better for me. Where am I at? Okay, so what I did here, for those of you who are interested, I added Bitcoin on Coinbase's volume and Bitcoin perps on Binance. I should probably add Bybit BTC CUSDT.P on Bybit, and then we're just going to divide it by 3. Okay, so this should give us the volume of the 3 biggest exchanges for Bitcoin, not just Bitcoin itself, but the Bitcoin futures. Actually, let me do Bitcoin futures too. BTC. And then that'll be 4. So this should give us all the volume that we need for this to let us know where the weakness is and where the strength is. Okay. So if we dip into any of this area over here, which is likely, in my opinion, though not guaranteed, but if we do get some weakness, this is where we're going to start looking for that weakness to find some support, or maybe to target where they're going to be, reversals. And all I did there was I just put in this is a volume profile for the year. And you can see that since it's all-time highs, it doesn't need to be any more than a year. And you can see that, depending on where we end up at the end of the bull market, there are places where you might actually see price come back in. Who knows? But we have some weakness in here. So far it held at 86. So right now, really, that's our area, that whole 86 down to, let's call it 82. There's another one at 80,000. So that could end up being where we're looking for, where we're going to be looking for help or support to kick in, I should say. If it does go there. And again, having a look at our analog, it's fairly likely that would happen in the next little bit. I think it's pretty possible that we have a pullback. And as always happens, you have a big rip, and there is a price gap here, it looks like, too, on the futures contract from BT. the CME futures created a gap right here. So yeah, this is 80,000 is probably where we're going to be paying attention to things. In my opinion, that's where I would, if we get weakness, this is where I would be looking to buy. I don't know if we're going to get it. I don't know when that could possibly happen, but to me, that's where it's at. All right, everybody. Thanks for hanging out. I'm going to go ahead and upload this for everybody who missed it. And for those who are not subscribers, subscribe, pollinatretrading.com. Love you all. I will catch